Today, Washington gave you a gift, and a few days after the heat blows over, you need to take it. What am I talking about? Okay, this morning, Cramer fave Allergan, AGN, the fabulous pharmaceutical roll-up, formerly known as Activist, that's currently in talks to be taken over by Pfizer, reported a spectacular quarter. The company delivered a fabulous 30-cent earnings beat off of a $3.18 basis. Higher than expected revenue rose by 90% year over year. After these numbers, you have to believe that Pfizer would be willing to pay for a huge amount for Allergan. Even if Pfizer walks away, though, from this potential deal that keeps being talked about, I think Allergan stock can work its way higher simply because of its terrific earnings power, which is why my charitable trust has such a big position in it. But instead of rallying today, the stock got hit, falling more than $1.50, because several Democrats in the House of Representatives announced the newly formed Affordable Drug Pricing Task Force in order to fight rising drug prices, and the Senate's looking at it, too. Look, we know this drug price issue has absolutely crushed many of the pharma and biotech stocks. I'm looking at you, Valiant. But Allergan's nothing like Valiant. They actually invest heavily in R&D to create new drugs rather than just raising prices on old ones. Plus, my guess is the task force in the Senate will be a little toothless, given the fact that the House laissez-faire free market crusader is in charge. And even if Hillary Clinton wins the presidential election in a landslide, it's insanely difficult for the Democrats to take back one House of Congress, let alone both of them. And I don't think anyone ever wants Medicare to actually start bargaining with these drug companies, well, at least in the majority party. More importantly, betting against Allergan because of its political headlines has been a bad move. After getting slammed down to 252 at the end of September because of all the agitation about drug pricing, stocks come roaring back, although obviously it's been aided by the takeover talks of Pfizer. I've said the stock's a buy into weakness, and today you got it. Now let's check in with Brent Saunders, the bankable president and CEO of Allergan, find out more about the quarter and what's next for his company. Mr. Saunders, welcome back to Mad Money.
Thanks for having me, Jim.
All right, Brett, I got it. I know it's the elephant in the room, and I know the elephant can't necessarily be petted, but, my colleague David Faber this morning on Squawk on the Street said, that Allergan and Pfizer are talking, and it's going to end up being the equivalent of a lot more if there is a deal than Allergan's currently selling for. I do have to ask you this. If Allergan were to be for sale, and if someone was to buy it, I presume that price would be a lot higher than $307 where the stock went out.
Yeah, I think that's probably a safe assumption, but just to be fair, we've issued a press release on our early discussions with Pfizer, and outside of that, there's not a whole lot I can comment on.
And can you give us a little more update? I know, again, difficult, on the deal with Teva. And you were talking about closing the first quarter.
Yeah, so the deal on Teva is on track. Our generic business had a very strong performance this quarter, which we announced this morning. And we're working very well with Teva executives on the pre-integration planning. R&D group in our generics business continues to fire on cylinders. And so we fully expect that to close in the first quarter, and they're going to get a very strong, nice business.
Okay, now, Brent, I want to talk about something you directly point out. You say in your conference call, look, pricing's been in headlines and featured in the presidential debate. Let's not pretend that this topic has just appeared in the news. You, one, have addressed this head on, and two, you have a strategy, open science at Allergan, that I think directly contends with what some of these people in Congress want to do when it comes to price increases. I want you to just talk about it philosophically for a second, because I want people to understand that drug companies just don't sit there and do nothing except for raise prices.
That's right. Look, we are in the innovation business. We have an open science model where we access the broader healthcare ecosystem to look for innovation to solve for unmet medical need. And look, at the end of the day, if we're going to talk philosophically about this, I believe pharmaceutical companies have a social contract in America to make sure that we continue to invest money in R&D, to raise drug prices in a very responsible way, and make sure that we can grow our business for our shareholders. And I believe all those things can live in harmony, and in the vast majority of the pharmaceutical industry, they actually do.
Well, let's talk about open science in action. Something I care tremendously about is the central nervous system. Are diseases that don't look like you have a disease, but millions upon millions of people have. You've got some leading therapies in mood disorders, migraines, Alzheimer's disease. Talk to me about what open science in action means about trying to solve what are the toughest issues, I think, the toughest diseases to solve.
Yeah, so let's take a really promising area where we've applied open science, and that's in depression. Now, there are numerous SSRIs out there, and that's been a standard of care for many years. But for many patients, that's not getting them over the hump on this disease. There's still tremendous unmet need. There are horrific side effects that people have to deal with. And so we went out and looked for how can we really make a difference in depression. This is a massive category with many suffering patients. And we negotiated a deal with a company called Norex to in-license their best-in-class compounds for depression. Now, we are doing the more costly studies, bringing them into phase 3. We're also working on moving it from an IV to an oral, which takes a lot of formulation science. And this is an investment we're going to make for the next several years to bring these drugs to market. But if we're right, we really have a huge impact on depression, and we also have a very large drug from a sales perspective. And so again, doing something that is really good for people suffering with depression, along with creating a return, hopefully, for our shareholders.
One last question, because I know that it's difficult to talk about this, but Botox, some said the numbers weren't that good. I looked at Botox. I thought it was extremely strong, and that there were some currency issues. Am I wrong about that?
Now, Botox on a apples-to-apples basis grew almost 13% in the quarter. There was a currency drag. We will ultimately lapse that. You know that the dollar has strengthened against a whole basket of currencies around the world. But Botox is doing great. It's a durable franchise, the #1 branded pharmaceutical in the world, and we continue to expand the indications and opportunities for Botox. And we believe, we presented today at an R&D day here in Irvine, that we have another multi-billion-dollar of opportunities just in the pipeline around Botox.
All right, Brent. Well, I appreciate your coming and being as candid as the law lets you be, because it was a fantastic quarter. I wish last time we saw you September 21st, that was the day that Hillary tweeted. So we had a couple tough days, but the numbers were great. Brent Saunders, President and CEO of Allergan, thank you so much for coming on the show.
Thanks for having me, Jim.
All right, guys, my Chapel Trust, big position, Allergan. What can I say? I think that this is the drug company of the future. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.